Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is Thursday, December 22, 2022. We are near the end of the week, and if you're waiting for a Santa Claus rally, today is not the day. Will it come tomorrow, or will you have to wait till Monday before the rally starts? I don't know. But in today's episode, I want to cover a very popular investment, Cathie Wood's ARKK. 2 years ago, this was the biggest news. How she outperformed, how everything she picks makes money. Tesla was in her portfolio. Now, we're not really talking about Tesla today. I just want to look at her mutual fund and what's happened since. A quick Google search on Cathie Woods and ARKK, and you will see that some of this is negative now. A few years ago, everything was positive, how she's the best investor, how her mutual fund is the greatest thing under the sun. So let's get right to it. Let's switch back to Yahoo Finance. One of the best places to start is let's take a look at what is going on with ARKK. So let's just take a quick look. Today's a big loss, nearly 5%, but that doesn't mean anything. So let's zoom out. Down for the week, down for the month, 6 month trending down. Year to date is pretty bad. If you look at that, 60% down. One full year is just as bad. Now, here's the one that we really want to look at, 5-year. And it's showing it's down over 5 years. Because if this was up, and I'll show you what I mean. We'll pick something that's up in the last 5 years. If you do a year to date, you see this is down. 1 year is down. But 5 years, Pfizer is up. And I even think something like Coca-Cola may have been up in the last 5 years. There you go. It is up. But let's go back to ARKK and let's take a look at some comparisons. The first comparison you normally want to do is let's compare it to the most common index. So I like to use S&P. We'll use red because that's just a common index that everybody should be beating. And let's just start off with year to date. So you can see that the indexes are negative 18% this year. But ARKK is even lower than that. Let's zoom out to it. So let's look at 1 full year, and you see this 1 full year ARKK is doing bad. Let's look at 2 years. You don't want to compare 1 year. Whenever you look at short-term returns, it doesn't have enough history to suggest what's going on. But now, if you look at this 2 year, you can see where ARKK basically outperformed in the beginning, and then it just underperformed after that. Starting right here is a crossover. This is only up 4%. This is down 76. But let's look at the 5 year. We want to be fair. So if you got in 5 years ago, ARKK was pretty good. It outperformed, and you can see where it continued to outperform. So right around here at the COVID, this is the beginning of COVID, and you can see that it still outperformed all the way up to here. This is the peak. And you still outperform right up until here. 4-4, roughly 2022. So here's what I want to talk about. Why is it so hard to beat the S&P 500? Because if you zoom out, and again, I don't know when they started. You want to try to pick a fair comparison. So I want to start, but you can see this. ARKK still underperformed because the red line is above it, and ARKK is 93%. So it's very hard. There's almost no date that you can pick where currently ARKK is outperforming. But that doesn't mean it was bad. If you're a short-term investor and you got in and got out, obviously you made money. But it brings me to something like this. We have all heard this before. Why do active fund managers can't beat the major indexes? And this is well documented. Most of them can't outperform it, especially if you look over a longer period of time. 5 years, we only looked at in ARKK, but most of the time, people have studied this for the last 10 years, and you compare it, most active fund managers have a hard time beating the S&P 500. And if we go back to this chart, I also want to be fair. Could ARKK still outperform? Of course it can. Because, again, we haven't looked at a long enough history and currently is underperforming. But is it possible for it to outperform? It's possible. And again, I'm just stating where it's at today. This downtrend obviously has been, you see that, when we looked at the 2-year, it underperformed for 2 years. And if we just scroll out a little bit more, you see that it's underperforming still. So this is near the beginning of 2022. And it's underperforming here. So you can almost see, if I just pick different time frames, there is an outperformance because that's where the blue line is above the red line. But if you didn't time it right and you didn't sell, then you're underperforming. So can you outperform the market? Of course you can. Tesla is a great example of this. Even with the volatility like these drops, you're still outperforming the market. Now, one reason why I love to use options is I don't have these volatilities. And what I mean by that is I don't have a year where I'm losing 10%, 20%, 40%, 60% a year. And then I have big gains. My option trading has been profitable every year. Whether I am profitable 5%, 10%, or 15% per year, what I try to do is try to be consistent in the way I trade. Because if I can be consistent every year with no losses and make profit every year, I don't have a down year. So on a risk-adjusted point of view, I can make money with less risk than the average investor, or even compared to, let's say, the S&P 500. And this year, I made a lot of videos about what I've been doing with my option trading, and I've been profitable using options, using less risk, because again, I haven't lost money in a single year using options. And the S&P 500 for 2022 looks like we're going to close down because I don't see the Santa Claus rally returning over 20% and making us back to equal or even for the year. So we're going to close the year 2022 with a loss in the S&P 500. And now some people do think next year for 2023, the markets may be -5 or -10%. Because when recession hits, some people do think a lot of these companies will guide future earnings downward, and that will push a little bit of pressure on the stock price to also come down a little bit. One of the things that I talk about in why I trade option is, again, if I can make 10% a year every year without having a red year, and if you compound that over a long enough period of time, my outperformance will happen because there is no red year. And as you compound gains on top of gains on top of gains, at some point you will see how I will outperform. But with that being said, that's all I have to say. Hey, let me know what you think. If you haven't already, subscribe, follow me. And again, as I always say, let's do this together. Let's do this $1 at a time. Have a profitable day. Bye-bye.